Welcome to the CBRE booth at ICSC's RECon convention here in Las Vegas. I'm fortunate to be joined by Peter Borzak, who is the managing principal of Pine Tree Commercial Realty. Peter, I think the last time that I interviewed you, we had a cell phone set up in your office with a recorder, so it's a little different today.
Remember that well.
You mind if I ask you a few questions?
No, go ahead.
Tell us a little bit about Pine Tree and how you started as a company. Certainly you've transformed from a regionally based company to more national in scope. If you could give us a little bit of the evolution of the company, that'd be terrific.
Sure, we started the company in '95, and we were primarily ground up developers focused on the Midwest, and our equity sources were a group of high net worth people that we had relationships with, mostly in Chicago. And over the years we evolved into a more national platform, investing across the risk spectrum. So we develop, we acquire stabilized centers, and we're also reconfiguring and redeveloping and doing a lot of kind of value add and opportunistic investing. And our model has changed from primarily high net worth to an institutional joint venture model. So all of our projects are done with a different institutional venture partner depending on the risk profile of the deal and the geography.
Peter, you've been a great friend to CBRE, a great partner and client of ours. I certainly regard you as kind of a student of the industry. Just taking a step back, looking at the economy today, you know, we're beyond the recession. Where do you think we are in the cycle? What are your views of how we're looking going forward?
Hard to tell, I think, about where we are in the economic cycle, and I hear a lot of different opinions about whether we've already peaked and are looking at another downturn or whether we're just starting to grow again. Our vantage point is a little bit more focused on the shopping center industry, and I think in terms of retail, we clearly are just starting to get out of the recession. The marketplace is starting to warm up to retail again. Investors are interested in retail and believe that retail is viable, where for a few years there, I think the conventional wisdom was that the internet was taking over and retail was a thing of the past. I think we've seen that that's not the case. Retailers are getting much smarter in how they're executing and embracing technology and using the omni-channel, multi-channel approach to their businesses and to their brand. So I think we're in a healthy phase right now where a lot of the good retail space has been leased. Some of the space that maybe is obsolete or should never have been built is being reconfigured or adaptively reused, and we're starting to see opportunities for development again. And there's been virtually no development for 6 years, and so in specific areas and for specific projects that can be pre-leased, there are opportunities. And as you know, we leverage our platform with CBRE's platform, and so we're working with you, with Scott, and Eric and the national leasing team as a true team approach to the business.
And we appreciate that. Your firm has been very active on the investment side and is becoming active again on the development side. When you look over the landscape of the United States, are there any markets specifically that ring up as great opportunities for you for expansion?
Not really, and I only say that because I think philosophically we look at the asset class as being so specific to location and individual site dynamics that we have avoided targeting a certain market and saying let's just go attack that market. We like to look for opportunities where the dynamics line up, and so we're finding those in different places. We've got a couple projects in Southern California. We've got a project we're working on with you in Texas. A couple projects left over from the last cycle, one in Boise, Idaho, one in Indiana, a couple projects in Chicago, and we're also redeveloping a mall downstate Illinois, so kind of a mix of markets and geographic areas of the country, but again, always on a very site-specific basis.
It seems like at least every other week you're traveling to New York City. I think you have a real strong handle on the debt and equity markets. Would be interested in your comments about the debt and equity markets as to the type of real estate that you invest in, but just in general, how they're viewing retail.
So retail, it seems to be the last asset class now to be embraced by the institutional community. Apartments were in vogue for the last few years, and so there's been a lot of activity there. The office market's coming back. I think institutions are now getting comfortable with retail again. The malls are obviously doing well. Grocery-anchored centers are in high demand, and cap rates have been dropping like crazy, especially for well-anchored and well-located grocery centers. In terms of strips, I think those are just starting to become an acceptable class again, especially the power centers, as investors are starting to get more comfortable that the retailers that are remaining are getting smarter and have a better business model. And so I think it's a good time to be investing. On the debt side, there is a lot of debt right now. There's CMBS debt, there's bank debt, there's still opportunistic funds. So it is not difficult to find debt if you've got a project that is viable.
And then my last question to you, you were recently elected as the real estate head for the YPO network, which is a global network, of course. And I'm presuming in that role you've had an opportunity to interface with a lot of folks from different parts of the world. Any takeaways from that whole process? Any markets that you visited that you were intrigued with?
Yeah, so I was in Cartagena last week in Colombia, which was a lot of fun because in my almost 30-year career in real estate, I've never had a reason to go outside of the U.S. borders. But being in Colombia and being with a group of people from Central and South America and hearing about all of the progress that they're making, the growth, the development, they're truly building nations right now. And the investors are looking long-term. They're building with sustainable practices. They're really looking to build up their economies, build up their middle classes, and they're approaching the business with a passion for their product that I think is a little bit unique. It is a little less focused on profit and a little bit more focused on long-term viability and how it's going to impact their societies. And so that was inspiring, not only because of the size and the scale, but also just because of the quality of what they're doing down there. So that was a lot of fun.
Great. Peter, thank you for your business, and thank you very much for your time this afternoon.
Thanks for having me here.
Okay.